Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? Okay, gold and silver started to take a little dip today, and then rebounded, then dipped, then rebounded. But is there an explanation for why it is that gold is taking off? The rumor is there's a heavy hitter out there that's a buyer, and they're buying up as much gold as possible. So make sure you don't miss out. Let's get into this. Before we get started, do me a favor, hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I certainly do appreciate it. If you're thinking about buying gold and silver, head on over to our friends at Miles Franklin. The link will be down below in the description. When you make your purchase, make sure you use promo code Pimpy, P-I-M-P-Y, and they'll take care of you. If you have any additional questions, you can reach us over here at this phone number or over here at this particular email. For all orders over $10,000, reach out by email and we'll make sure that you get a great deal. So come on over to Miles Franklin and add to your precious metal inventory. All right, as most of us are aware, Bitcoin is getting ready to go through their halving event. Usually that's a reason for a dip and then a rebound. But somebody was saying that cryptos are taking a hit because of the ongoing tension in the Middle East. I was like, well, that's not good. That's not how you want your safe haven to act whenever there's a crisis. Bitcoin at $63,417. Ethereum's at $3,120. Solana's at $139.80. XRP, man, look at this, is below 50 cents. So much for this thing being a $500,000. Dogecoin's at 16 cents. How funny, it's going up. Cardano's at 46 cents. Shiba's at 4022. Polkadot's at $6.73. Chainlink's at $13.64. Polygon is at 71 cents. And Litecoin's at $78.46. Terra Luna is at 30101. And Coin just barely dipped into the red. Look, it's going up and down between the green and the red there. But as you can see, Chain is actually performing pretty good besides this dip from today, but it has been doing pretty good for the last few days. It did lose a zero. It is at 2 zeros now, 1.5. It was on its way to being 2 zeros too, but came back down just a little bit. You can see here the volume over the past 24 hours is 135% growth. Well, now looky here. Gold is back up above $2,400 at $2,401.30 per ounce. Lo and behold, yes, look at the rebound on silver. Silver is now at $29.01. Both looking very, very good, and I'm hoping you guys are buying into precious metals. So what is the reason for the dip in gold prices? Let's listen.
Some ground after hitting a record high in today's trade as the U.S. dollar sees its biggest weekly jump in years. Now, we were actually just talking to Tom Sosnoff about this. So the metal, interesting kind of round trip today because bullion breaks the 2,400 an ounce mark early today, Jared, fresh record, then edges lower. Bottom line, though, front and center, geopolitics are top of mind. Yeah. Investors are looking for your go-to traditional safe havens, and gold has been it.
Yeah, let's go back to the Wi-Fi Interactive for a quick look at some charts. This is a 3-month chart, and you can see gold really started going in the month of April, and I think, there's a huge volatility move. Nothing new, but I think you're right as to the catalyst. We got geopolitics, we got inflation front of mind, and just another reason why people are piling to the yellow metal. A lot of it has to do with the business cycle and where we are right now. When the Fed is on hold, when it's thinking about cutting rates, that is gold's time to shine.
Yeah, Mohammed Arian writing on X, Jared, gold prices are up, he says, as more investors view it as a better hedge against geopolitical risk than government bonds due to U.S. inflation concerns.
So they're trying to tell us that a couple of days ago it experienced a dip due to the fact that the U.S. dollar was stronger. And I said, how the hell could the U.S. dollar be stronger? These are the real inflation numbers, despite what they keep telling you in the media. Energy is up 38.8%. Gasoline cost is up 47.8%. Electricity is up 29.3%. That's nationwide. But here in California, it's up 42%. Natural gas is up 26.9%. Groceries are up 21.1%. Eggs are up 49.3%. Milk is up 15%. Chicken is up 23.9%. Transportation cost has increased 32.5%. Airfares are up 32.7%. Public transportation is up 22.2%. Used cars are up 20.9%. And your clothing is up 13.5%. Compared to where Trump was at this time of the presidency, that's crazy because he was negative in a lot of these. And they're trying to tell us that the US dollar is stronger. The average family has lost $23,760 paying for the increased cost of living under Biden, according to a joint economic committee, including $4,170 more on energy. Yeah, I believe that. $3,206 more on food per year. $3,981 more on shelter. $8,455 more on transportation. So how the hell is the dollar getting stronger when we keep getting less? So as I stated, gold and silver not only have rebounded, but they seem to be taken off all over again. Usually when that happens, they'll find some piss poor excuse to go ahead and make the price dip. Don't fall for it. Like I said, I don't care if it drops down to 1 cent per ounce for both gold and silver. Just keep buying. Because even though the prices have gone up in the recent couple of months, that's nowhere compared to where it's going to go once it starts really taking off. So this top central bank is ready to acquire all gold and silver. Yikes. And there's another buyer in town as well. So let's listen in. This is why you should be buying gold and silver.
The data tells me that there is a new buyer in this marketplace. But the central bank gold buying has propped gold up or held it up when higher interest rates and reduced tensions before October 6th should have been headwinds for gold. You know, the higher dollar, there were a number of things that would have been a headwind for gold. There is a new buyer. It's not just central banks. There is a new buyer. Now, who is he or she? Obviously, it's not one person. I cannot tell you I know the answer to that. But there's a new buyer in this space that wasn't there before. And I do see that as very bullish. Yeah. The Fed, despite everything, is still talking about, oh, it's just bumps on the road. We're still on track to cut rates this year. And if they stick with that, rate cuts are also very bullish for gold.
Gold prices surged to near record levels on Monday, propelled by a sharp rally fueled by heightened safe haven demand amidst the ongoing turmoil in the Middle East. The precious metal has witnessed a remarkable 20% surge over the past 2 months, with analysts projecting further gains in bullion prices. Lobo Tigre, editor at the Independent Speculator, underscores the pivotal role of central bank gold buying in shoring up gold prices, even in the face of headwinds such as rising interest rates and easing geopolitical tensions. Tigre emphasizes that central bank purchases, particularly by entities like the People's Bank of China, have provided steadfast support to gold prices, contributing to its resilience in the market.
Did you see what that said? China splurges on gold for a 16th month as price hits record. The central banks haven't stopped buying. Over the last 3 years, every year they've set a new record for the amount of gold purchased. So where are they going with this?
China have provided steadfast support to gold prices, contributing to its resilience in the market. Goldman Sachs has revised its gold price forecast upward to $2,700 per ounce by year-end, compared to its previous target of $2,300. The company cites the metal's entrenched position in an unyielding bull market. Gold price's recent breach of the $2,300 mark, driven by geopolitical uncertainties and expectations of U.S. interest rate cuts, has drawn attention to China's significant role in shaping gold demand dynamics. The PBC's consistent gold purchases for 17 consecutive months in 2023 solidified its position as the most aggressive central bank buyer, underscoring China's growing appetite for gold amid global economic uncertainties. Tigre suggests that geopolitical tensions, mounting inflationary pressures, and pervasive economic uncertainty may fuel new buyers' burgeoning interest in gold acquisitions, further cementing its status as a prominent player in the gold market. Market response to closely aligned official figures with Wall Street's consensus would only slightly sway sentiment. However, significant deviations in CPI data could trigger substantial price swings. Lobo Tigre highlights the importance of persistent inflation perception, particularly in the U.S., prompting investors to turn to assets like gold as a hedge against currency devaluation.
Yes, exactly. As the dollar loses its purchasing power, gold will go up in value. Nobody is buying that the dollar is stronger. We know what the real inflation numbers are. So no, the dollar is not growing in strength, despite what they're telling us in the news. That's why I say gold preserves your wealth. I told you the story about buying a house in 1932. Those same ounces of gold to buy the house back then can buy you a house today. Precious metals is the place to be.
Come along as we explore the valuable insights provided by Lobo Tigre. Don't miss out on our latest updates. Subscribe to our channel and activate notifications. Thank you for tuning in.
Invasion of Hamas into Israel. And the hockey stick inflection is really over the last couple months, so they're not the same event. I do subscribe to the view that many of my peers have, that central bank gold buying has been a big factor here. Now, that's not just recently, that's been ongoing. So the more hockey stick inflection point, I do see a new buyer. Now, I don't claim to have secret sources in the CIA or space aliens, monitoring out there on my behalf. So I can't tell you, Jeremy, that I know, this is it. And buy my newsletter and you'll find out the secret way to profit, right? That's just not the way I do things. The data tells me that there is a new buyer in this marketplace. But the central bank gold buying has propped gold up or held it up when higher interest rates and reduced tensions before October 6th should have been headwinds for gold. The higher dollar, there were a number of things that would have been a headwind for gold.
So what he's saying is all those indicators he just told you should have made the value of gold drop. But the fact that it hasn't and it continues to go up, well, that's a good sign for holders of gold and silver. Like Rafi was saying before, we haven't even seen a run yet for gold and silver. We only seen the commodities run. Gold and silver have yet to go on a run.
This is part of why the gold stocks underperformed, because there were visible headwinds for gold. And the central banks were buying physical gold, not stocks. So the stocks responded to the macro setting more than gold seemed to do. And suddenly now we have this hockey stick inflection point. I'm hoping that it goes much higher as a gold bug. So what I get from that, Jeremy, is there is a new buyer. It's not just central banks. There is a new buyer. Now, who is he or she? Obviously, it's not one person. I cannot tell you I know the answer to that. You've spoken to Rick Roll, and I'm sure he's told you, and our audience has heard before, that Rick likes to say that the average allocation to safe havens, gold, like gold in, global portfolios is on the order of 2%. We're not talking crazy gold bugs buying, putting everything in gold. We're talking about overall global asset allocation over the decades being around the order of 2%. And recently it's only been on the order of 0.5%. So if people decided that they needed more of a safe haven, not necessarily because of today's news, but just the context that we're in today, that could be the sort of thing that brings this new buyer to the table. Over the last few months, people saying, you know what, we've got two hot wars, either of which could turn into World War III. We've got inflation getting sticky, right? And the world is just the sort of place where a bit of a physical safe haven asset might be a good thing. And that could be your new buyer. And I want to stress one point there. I said inflation being sticky, it's U.S. inflation. And of course, the world is larger than the U.S., but commodities are priced in dollars. The gold price, I like to call the gold dollar exchange ratio, because I think of gold as money, and therefore it's a Forex question. So it famously, though, your predecessor there at Kitco would always, point out to me that gold doesn't correlate very well with CPI. Well, that's because it leads. Like when people get afraid, and we just saw the new University of Michigan numbers saying that expectations for inflation have popped back up again, right? So when people think their money is going to become worth less, that's when people start buying gold. Yeah. So this sticky inflation story is really important.
If he's saying that people buy when they feel like inflation is going to get worse, what about those people out there who are not aware that the inflation numbers are fake? They're not real. They're just trying to prop up this economy for this upcoming election. But they're running down to tricks, obviously, because there's a lot of pressure on the prices of gold and silver. Not to mention, I just showed you guys what the real inflation numbers are. So what does that mean when people really start to wake up to the fact that inflation is way higher than what they're being told? They're going to run to gold.
The Fed has guided it's going to be cutting rates. And, the Paul Krugman told us just last year that we beat inflation. There was a problem and it's gone. It's done. It's over. So for people to suddenly say, oh, wait, I thought we were told it was over. We don't have to worry about inflation. We're well on our way to 2%. And suddenly, no, it's gone back up to 3.5%. That's the kind of thing that I think can get this missing buyer into the marketplace, right, Jeremy? So that's the short version. And can't give you his ID tag, but there's a new buyer in this space that wasn't there before. And I do see that as very bullish.
Despite prevailing uncertainties, Lobo Tigre points out bullish factors bolstering gold prices, including ongoing central bank efforts to diversify away from the dollar and the Federal Reserve's commitment to rate cuts. Central banks, Chinese investors, and a growing number of Western buyers are actively promoting both gold and silver.
It's interesting that the article said the central banks are buying up gold to get away from the dollar. Why would they be moving away from the dollar? This is why I tell you, these things are planned events.
Favorable macroeconomic conditions, such as anticipated interest rate cuts by the Federal Reserve, further support the case for gold and silver. Tigre suggests that while short-term fluctuations are possible, the overall outlook for gold remains positive, with any corrections presenting potential profit-taking opportunities rather than signaling substantial downturns. If the conflict in the Middle East escalates, gold prices will likely extend their rebound towards $2,400. However, a resurgence in demand for the U.S. dollar driven by increased safe haven flows and hawkish expectations from the U.S. Federal Reserve could dampen the upward momentum of gold prices. Let's get back to the interview.
This new buyer, since we don't know who he or she is, how can we make any kind of reasonable projection for how long he or she will be buying?
True.
Right, so this is tricky, Jeremy. It's dangerous to make projections now. And as much as our Gold Bug audience would love for me to say, yeah, this is it, it's going to the moon, buy, a la Kramer, right? I have to say the rational answer here is that since we don't really know, and we won't until we have hindsight on this, know exactly who and why is buying.
Even if there wasn't a new buyer moving into the market was already moving just fine on its own. This new big buyer is only going to make the prices skyrocket. But even if we don't know who the buyer is, on its own, gold and silver was already moving up.
Cannot project how long that buying will be there. Now, the bottom line, Jeremy, is I remain bullish because even if this new source of buying dries up, if it stopped today, as you and I speak, that doesn't change central banks trying to de-dollarize. Right? That trend is a one-way change. China is not going to suddenly want to go back to being dependent on Washington and New York for its transactions. So, that's a one-way change, and that's very bullish for gold. And, the Fed, despite everything, is still talking about, it's just bumps on the road. We're still on track to cut rates this year. And if they stick with that, rate cuts are also very bullish for gold. We could be, but I don't actually see any reason for, any substantial correction. If it got a bit ahead of itself, okay, it might correct a bit. But I'm actually not.
A bit of profit taking.
Yeah, right. Nobody goes broke taking profits. I just saw, people get so emotional on Twitter. I just saw somebody on Twitter slamming me for posting $2,400 gold. Oh, it's gone. It's over. It's done. It's like, come on. You're talking about an intra-hour fluctuation. We didn't even know where it's going to close today.
So the person on Twitter or X platform, when he posted that gold would be at 2,400, he said, oh, it's gone. It's never going to be there again. Is that what they told him? It's back up above $2,400.
But okay, say it drops back to 2,350 or something. 2,350? Are you kidding me? That's a fantastic price. It's a price that makes, gold miners, even mediocre ones, gush cash at those levels if they haven't completely screwed up. And the gold projects out there, their price assumptions in their decision-making models, a $2,000 price assumption was an aggressive one. So those projects look great. So I'm actually not worried about gold at all. And I know you'll get there, but I'm quite interested. To me, the big surprise is silver, Jeremy. One, it's not an all-time high. It's a nominal high. If you inflation adjust, even using the government's nonsense CPI numbers, a real all-time high would be over 34.
See, the CPI numbers are what is used to calculate out inflation. Nobody that's in this field believes the numbers.
$400 or 35 if I credit Mike Maloney's intraday peak in 1980. So we're a long way from a real high. And I think that's important to stress because gold is an alternative to the dollar. And if it's part of its value is disclosing the loss of value in the dollar, then I think that should be accounted for. The other thing I would say is, yes, the geopolitical tensions are all the headlines right now, but gold's been ramping up now for a couple of months. And this started, or the sort of hockey stick that we're seeing in the gold and silver stock charts, or sorry, not stock, but silver charts, That happened after October 6th and before this current escalation. So I don't think either can really be seen as the root cause here.
Bank of America commodity strategist Michael Widmer has set a target price of $3,000 per ounce for gold, expressing optimism about silver's performance.
Yeah, so that's what these administrations do. They get to pick what makes up the CPI numbers and then what calculates into inflation numbers. So there's no consistency because they keep changing what should or should not be included. We don't need to look at that. You can look right here. Inflation at same point in presidency. Look at the difference between the two. But even if you don't want to make a comparison and you're like, oh, I hate Trump, fine, whatever. Just look at where Biden currently is sitting number-wise, inflation. The same guy to keep saying there's no inflation, our economy is doing good. It's all pumped up fake data in order to try to make his presidency look good. But these are your true numbers. This is what you're looking at. The people out there that are struggling paycheck to paycheck, they feel it. They know there's no decline in inflation. Inflation is much higher, and their dollar isn't buying anything near what it used to, not like it was about 4 years ago. So if gold and silver are moving like they're doing right now, and they continue, and they haven't even had a real run yet, woo, man, I can only imagine. Gold, again, is above $2,400. Silver is at $29. Makes me laugh because I remember back in 2015, when I kept bugging people to buy into gold and silver, you can get silver for like $11 an ounce. Anyways, that's it for now. Look forward to your comments, and I'll get back at you later. I'm out.